What made headlines in 2023? Catch the real impact of top story of 2023. Watch the 2023 year-end specials only on the Business Standard Morning Show starting 22nd of December.
Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal. It's the 21st of December 2023. And here are the questions we will be answering today. Has the new Telecom Bill let OTT off the hook? Did 2023 launch India's space sector into a higher orbit? How should bond market investors prepare for 2024? And what is Bhashini?
Advancing data center performance and energy efficiency to solve your most important business challenges. AMD. Together, we advance.
After over 138 years, the government is rewriting India's telecommunication laws. Interestingly, the bill text doesn't have OTT in the definition of telecom services, but the way it defines telecommunication opens the possibility of its later inclusion. Kasturi Akhil speaks to experts to get a clear picture.
Highly anticipated Telecommunications Bill 2023 was tabled in Lok Sabha on Monday, 18th of December. It seeks to replace the Indian Telegraph Act 1885, the Indian Wireless Telegraphy Act 1933, and the Telegraph Wires Unlawful Possession Act 1950. These laws were passed way before mobile phones became part of our lives or the internet connected the world. The new bill seeks to update the current regulatory framework in tune with the advancements and challenges in the sector. After tabling the bill, Union Minister for Communications, Electronics and Information Technology, Ashwini Vaishnav, said that it would become a law in the next 6 to 10 months. One of the key highlights of the 46-page bill was that it dropped mention of over-the-top or OTT players or apps from the definition of telecommunication services. Previous draft of the bill had specifically extended the definition to OTT services such as messaging platform WhatsApp and video calling program Skype, among a wide range of specialized communication services. Telecom service providers such as Bharti Airtel and Reliance Jio have been demanding a level playing field as OTT communications and satellite-based services offer audio and video calls and messaging without paying license or spectrum fees. Government officials had earlier said that the aim was to only regulate communication apps that give the same service as telecom operators. However, as OTT platforms are already subject to regulation by the Ministry of Electronics and Information Technology, industry players are concerned about increased regulatory burdens. Some experts find the definition quite vague and believe it does not conclusively rule out internet-based messaging and call services. But the missing reference to the term OTT has surprised many. Does it mean that OTT is off the hook?
The new bill has actually a cleaner but more generic definition of the word telecommunications, and telecommunication services includes all telecommunications as defined. And to suggest that OTT is off the hook would imply that OTT is not telecommunications in the generic sense, which it is. So I don't believe that OTT is off the hook as of now. So OTT will be off the hook only if it is explicitly off the hook. And if the bill explicitly mentioned that despite this definition, the following telecommunications activities are not included in the telecommunication services that are going to be off. require authorization or licensing.
If you do a joint reading of the definitions of telecommunication services, and messages under this bill, you would basically see that telecommunication services are defined as any service that is allowing transfer of data through any sort of electromagnetic system. Essentially, broadly, that is the point. Now, if you take that to then be the definition and apply it broadly, it can be applied to any sort of OTT service. So of course, just purely theoretically going by these three definitions, OTT services can be included under the ambit of this law. However, there are some sort of indications coming out of anonymous sources being reported in media, etc., that OTT won't come under this bill, but that is just conjecture.
And what if OTTs are included later?
If that were to happen, it would be a major setback. It would be because it would have all kinds of implications. One, of course, that it would automatically contravene net neutrality, because, as you know, OTT services are typically internet apps, and internet apps can be accessed on the internet. So what we would end up doing is to say that some internet URLs will be treated differently for regulatory purposes from others. If you were to treat any of the OTT services as a telecommunication service and require authorization, for example, it might mean that these services cannot be accessed in the same way as they are currently. It might also mean pricing. It may also mean that there is a regulatory cost, maybe a fee that they are supposed to pay for such authorization, because typically that is what authorization constitutes.
Experts believe including OTT within the ambit of the Telecom Bill will lead to a violation of net neutrality and may jeopardize the business prospects of internet applications. Moreover, if OTT is added later, it would require tweaking many existing provisions in the bill because of the fundamental differences between the two. One being a telecom infrastructure and the other being services offered by means of using the infrastructure, hence demanding distinctive regulatory approaches.
Telecom Bill will indeed be one of the hallmarks of this year. Well, this year also took India to the moon. With the remarkable success of the Chandrayaan-3 mission, the country's capabilities in space exploration and technology shone bright this year. And with the introduction of the new Space Policy 2023 and an increase in public-private partnership in the space sector, India's vision of dominating the higher orbit appear well set to take off. In our next report, Abhijit Kumar charts the country's evolving landscape of space exploration.
The success of Chandrayaan-3 earlier this year has marked a turnaround for the Indian space sector. India is now the fourth country in the world to have achieved a soft landing on the moon and the only nation to have landed on the lunar South Pole. And it did not end there. Soon after, the country reached another milestone following the successful launch of the Aditya L1 mission destined for the Sun. And then the country set its eyes on a manned mission to the moon by 2040. These triumphs have served a catalyst, breathing fresh life into the aspirations of the flourishing space startups. Union Minister Jitendra Singh recently said that space is becoming an important component of India's economy. Space startups in India have attracted an investment of over 1,000 crore rupees between April to December 2023. Singh said that India carries the potential to achieve a $100 billion space economy by the year 2040, much more than the current valuation of $8 billion. And the minister's confidence is not unfounded. The number of space startups in the country has grown tremendously. From a single space startup in 2014, India had 82 startups in 2020. The number has increased to 204 in 2023. According to the Indian Space Association, till November 2023, Indian space startups amassed almost $124 million in funding compared to $120 million in 2022. With a conducive policy environment and exciting opportunities in the sector, private funding has also flowed incrementally. Earlier this year, Alphabet, the parent company of Google, invested $36 million in Bangalore-based space startup Pixel. This marked the first major investment in the Indian space sector following the government's privatization policy in April. The private funding poured in after the government approved the crucial Indian Space Policy 2023, aiming to increase the country's share in the global space economy from the current 2%. The policy allows non-government entities to engage in all domains of space activities, enabling the private sector to leverage ISRO's expertise and experience. Also, the establishment of InSpace as the regulatory authority provided a comprehensive framework for overseeing space activities and promoting indigenous technologies. The Artemis Accords, signed in June, marked India as the 27th country collaborating with NASA in space exploration. Industry insiders believe that India's private space players will get a boost to expand their presence globally and increase India's footprint in the space economy. However, it isn't all bright and sunny for the space sector. While the number of space startups has grown over the years, their prime concern remains the potential market. The products and services of these startups are still heavily reliant on government contracts. So, what are the other issues that still haunt the space startups?
FDI policy or foreign direct investment policy. So that is yet to be announced, and we do not have any clarity on that yet. And that stops foreign investors investing in Indian space companies, and the funding gets limited when you are in a growth stage company and you want to raise, let's say, more than $40-50 million. So that's first thing. The second thing is we have to look at the fact that even if we have a sector like this in India, it was always state run, and it is slowly transiting to commercial companies working on space industry right now. But we've still not seen government being an anchor customer for any of the products that are built by the Indian space companies. So creating a market locally and domestically is very important, even before we talk about the growth of the sector, because growth only comes if the government handholds and provides opportunities for Indian companies to work on developing products in India.
Experts point out that the optimization of space products will soon lead to a self-sustaining ecosystem like the Western nations. However, one major issue that the industry has faced of late is the lack of skilled human resource. The space sector is a niche industry and requires specific skill training. And with the boom in the private sector, the need for skilled labor is getting higher.
Since this sector remained reserved for the government, except ISRO, you did not find skill sets available anywhere else. And I don't mean skill set by working hands on the ground. I mean skill set right from mission planning to the absolute top end. So our startups actually have been doing some extremely good job there, and huge promise which is visible. Now, there's enormous amount of action which is happening, and some of the IITs and many other engineering colleges now are moving towards creating space as a specific specialization.
So what does 2024 look like for space sector?
In fact, 24 we see that the number of launches are going to be further going up. There's a very clear decision by the government now that Kulashekhara will be the next launch pad, and that would obviously start getting under implementation. Subsequent year, we'll actually see commercial launches taking place, not just by the government, which has been the past ISRO and NSIL. On the data utilization side, a lot is in the making, and a lot of new hardware as well as soft services are getting installed. Early contracts in terms of data processing, value-added services on data actually happening now. The Ministry of Defense, which is one of the biggest consumer of Earth observation, actually having placed some contract.
As India reflects on the accomplishments and challenges of 2023, the focus remains on leveraging the momentum of the year's successes, particularly in skill development, to drive the country's space sector towards greater innovation and collaboration.
Advancing data center performance and energy efficiency to solve your most important business challenges. AMD, together we advance.
For India's bond markets, 2023 was quite a bumpy year. Surging US yields and a volatile inflation trajectory kept investors on the edge. But the much anticipated rate pauses have provided relief to investors. Our next report by Harshita Singh brings the outlook for bonds next year and how investors should position themselves in fixed income assets.
The year 2023 has proven to be a pivotal year for the Indian bond markets, which have seen a robust turnaround. After reeling under selling pressure in the past 2 years due to rate hiking spree of global central banks and the RBI, Indian bonds are now approaching the year-end on a strong foot. Evidently, with rate pauses kicking in 2023, the benchmark 10-year bond yield has cooled off to 7.17% levels after beginning the year near 7.327%. In May, it slipped below 7% for the first time since April 2020 as inflation began to show signs of weakening. It again peaked to 7.38% in October as RBI surprised the market with possible OMO sales. However, with last week's Fed pivot and its forecast of 3 rate cuts next year, global and domestic investors are increasing allocation to sovereign bonds, keeping yields lower. Analysts expect 2024 to be a strong year for Indian fixed income assets and suggest investors go long on debt securities.
After the aggressive front-loaded rate hikes, both in India as well as globally, over the last 18 months, we have seen that the monetary policy tightening cycle has taken a pause. Real yields are positive across the curve and expectations of rate cuts are building up in the markets. Global markets are expecting a soft landing and bond markets are pricing in steep rate cuts both in US and as well as Europe. In India, the scenario is slightly different. Growth is holding up pretty well as seen in the last week's GDP growth data. And we expect that Indian rate cutting cycle will be a shallow rate cutting cycle. We expect a shallow rate cuts or a shallow rate cutting cycle of 50 basis points in India to begin probably from Q3 in FY25. Typically, what we have seen is that yields at the longer end of the curve start to come down a quarter before the actual rate cut cycle starts. And hence, we think that investors can look at dynamic bond funds and long duration funds to take advantage of any fall in yields next year.
BAL further sees the 10-year bond yields to continue their decline and slip below 7% over the next few months. Sharing this view, Pankaj Pathak of Quantum AMC believes long-term bonds will perform better in falling interest rate environment. He suggests that investors with 2 to 3 year holding period can consider dynamic bond funds given their flexibility to change portfolio positioning. On the other hand, those with short-term horizon and small risk appetite can invest in liquid funds that invest in government securities. Thus, fixed income securities are expected to give healthy returns in 2024, and investors should look towards debt market accordingly, experts suggest. Today, on December 21, stock-specific action, weekly F&O expiry, and global market cues will guide Dalal Street.
He's making plans for an early retirement. Business Standard.
Whether it is trading in financial markets or a banking transaction, artificial intelligence is soon going to make your experience even better and enjoyable. It is also helping us bridge the language barrier. Prime Minister Narendra Modi recently used language AI tool Bhashini to communicate with his Tamil audience. Vasudha Mukherjee has more on it.
The roots of Bhashini can be traced back to Digital India Week in Gujarat in 2022, where Prime Minister Narendra Modi introduced Digital India Bhashini. The aim was to enhance internet accessibility and digital services in Indian languages, incorporating voice-based functions and promoting content creation in diverse languages. The Digital India Bhashini division comes under the Digital India Corporation, which is a Section 8 company under the Ministry of Electronics and Information Technology. This is currently being led by its CEO Amitabh Nag. Bhashini operates as an AI-driven language translation system, breaking down language barriers and enabling conversations between speakers of different Indian languages. The platform is accessible through dedicated Android and iOS apps, which gives a user-friendly experience. According to reports, Bhashini was developed by the government with tens of thousands of people in India adding data from their native languages to create open-source language data sets on which others can build tools. There are at least 700 languages in India, but most of the content available online is in English or in other major Indian languages. The overarching mission of Bhashini is to enable all Indians to access the internet and digital services in their native languages. The plan is to ensure that information is accessible in local languages that may not have national recognition. Bhasha Daan is an initiative which is focused on gathering language inputs across multiple Indian languages. This initiative encourages individuals to contribute anonymously, enriching datasets for AI model training and supporting the development of products and services beneficial to society. Bhasha Daan includes 4 categories through which people can contribute. The first is Suno India, where you can contribute by typing out audio content or validating transcriptions made by others. The second is Bolo India. Here, people can donate their voice through sentence recordings and validate audio recordings contributed by others. The third is Likho India, which allows you to contribute by translating the provided text and validate translations submitted by others. And finally, Dekho India, where one can contribute by typing text seen or labeling images and validate images contributed by others.
I will achieve, I will fly high. I am the SBI. I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Digital India Bhashini division and the RBI's Innovation Hub has recently signed a pact to extend digital financial services to people in their native language. Well, that's all we have for you today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.